Welcome to ES Gold. This is your daily outlook for gold, XAU-USD, for Tuesday, the 24th of June, 2026. Today we cover the new US-Iran peace deal, the hawkish Federal Reserve under Chair Kevin Warsh, the dollar, this week's heavy data calendar, central bank demand, and every key technical level you need to trade today. Where gold stands. Spot is trading near 41.30 to 41.40, roughly 26% below the January 28th all-time high of 55.89. Price sits below the 20 and 50-day moving averages, with the 200-day average broken. RSI is near 36 and falling. Short-term bias today, bearish. What changed since last week? The biggest shift is geopolitical de-escalation. A week ago, an unresolved U.S. Israel-Iran conflict supported a safe haven bid. That premium is now unwinding fast as a credible peace framework takes shape, removing a key prop under gold just as the Fed turns hawkish. 3 of the 4 big forces now lean bearish. The main offset is record central bank demand. Base case for today, bearish. Expect choppy to lower trade inside 4,006 to 42.55. A break of 41.14 opens 4,060, then the key 4,000 shelf. Oversold leaning momentum keeps a short covering bounce alive as secondary risk. Watch the dollar index, 10-year yields, and the data releases at the New York Open. Driver 1. Today's headline. The US-Iran peace process. On June 17th, the two sides signed the Islamabad Memorandum to end the war, with a 60-day ceasefire to reach final terms. On June 21st, mediators Qatar and Pakistan announced a roadmap toward a final deal. It commits to reopening the Strait of Hormuz and ending operations on all fronts. For gold, this is bearish. The safe haven premium is fading and energy prices are easing. The one-tail risk is Iran's unresolved nuclear program. Driver 2. The Federal Reserve. On June 17th, in the first meeting chaired by Kevin Warsh, the Fed held rates at 3.5 to 3.75%. The shock was the dot plot. Officials removed their 2026 rate cut projection and signaled a hike is now possible. 9 of 18 officials see at least one hike this year. This is the most hawkish posture since 2022 and strongly bearish for gold. Driver 3. The dollar and yields. The hawkish Fed has lifted the dollar index to its highest level in over a year and pushed the 10-year Treasury yield back to around 4.5%. Gold's inverse relationship to the dollar and real yields is the dominant near-term headwind. A reversal in either is the most likely trigger for a relief bounce. Driver 4. Inflation. May CPI re-accelerated to about 4.2% year-over-year, the hottest since 2023, led by energy. That underpinned the Fed's hawkish pivot. The next big test is the PCE price index, the Fed's preferred gauge, due Thursday. A hot print cements hike bets and pressures gold. A soft print could spark a relief rally. This week's calendar is heavy, so expect volatility around each release. Today brings the S&P Global Flash PMIs, preliminary durable goods, and weekly jobless claims. Wednesday delivers the top-tier PCE inflation report. Friday brings the third estimate of first-quarter GDP strong data, reinforces the Fed and pressures gold. Weak data is the bull's best hope. Driver 5. The structural bull case. Central banks bought roughly 863 tons in 2025, well above the 10-year average, and added about 244 tons in the first quarter of 2026. This persistent buying cushions downside near 4,000 to 4,100, and the long-term thesis is intact, with Wells Fargo carrying a $6,300 target. Now the technicals. Gold remains in a corrective downtrend, with lower highs and lower lows since February. Price is trading below both the 20 and 50-day moving averages, while the 200-day average remains broken. A clear supply zone sits at 41.55 to 41.90, where sellers have been active on every bounce. This is still correction mode, not a confirmed reversal. Momentum is soft, but not yet washed out. The 14-day RSI is near 36 and declining, leaving room before deeply oversold below 30. MACD is flat near the zero line, signaling a lack of momentum. The money flow index is ticking up gradually, hinting at minor inflows. With price showing indecision near resistance, the path of least resistance stays lower until a catalyst flips sentiment. Resistance levels above. First, immediate resistance at 41.57, the base of the supply zone, and today's key intraday pivot. Above it, 42.02, the reaction high zone that capped the last bounce. Then 42.55, the upper daily band. Bulls need a sustained reclaim of 42.02 to 42.55 on real volume before they gain any traction. Support levels below. First support at 41.14. Below that, 4,060, a minor swing level. Then the critical line, 4006, the 4000 psychological shelf that bulls must defend. A daily close below 4000 exposes the weekly low projection near 3894, the bear extension target. Your trade map for today. The sell zone sits on rallies into 4155 to 4190, with a stop above 4210, targeting 4114, then 4060. The buy zone sits on a defended hold of 4000 to 4100, with a stop below 3950, targeting 4157, then 4202. Price near 4135 sits mid-range, so wait for 4114 to break, or 4000 to hold. Scenario A, the primary path, around 55%, bearish continuation. De-escalation plus the hawkish Fed keep the dollar and yields bid, and sellers defend the supply zone. A break of 4114 opens 4060, then the 4000 shelf. A close below 4000 exposes 3894. Hot data today would accelerate the move. Scenario B, around 30% probability, a range or relief bounce. Oversold leaning RSI and minor money flow inflows spark short covering. Gold probes 4157, then 4202, capped by the supply zone. The trigger would be soft US data or a pullback in the dollar. Treat this as a sell the rip backdrop, not a trend reversal, unless price reclaims 4255. Scenario C, around 15% probability but high impact, a bullish reversal. This needs a real catalyst, such as a ceasefire breach or a collapse in the nuclear talks, or a clearly dovish PCE on Thursday that revives rate cut bets. A surge back above 4255 on volume would invalidate the bear case, and central bank dip buying near 4000 could build a durable base. Risk management and what to watch. Event risk this week is elevated and two-sided, so keep size modest and define stops before entry. For longs, an absolute stop below 3950. For shorts, a stop above 4210. Watch the PCE report Thursday, the dollar index, and 10-year yields in real time. And keep one eye on the Iran nuclear talks. Any breakdown is the fastest route to a safe haven spike. The bottom line for June 24th. Gold is in a corrective downtrend, pressured by a fading geopolitical premium, a hawkish Fed, and a one-year high dollar. The path of least resistance is lower while price stays below 4202. The line in the sand is 4000. Sell rallies into the supply zone. Respect the structural floor from record central bank buying, and let the data set the tone. Trade the levels, not your conviction. That is your full gold outlook for Tuesday, the 24th of June, 2026. If this analysis helped, please like, subscribe, and turn on notifications so you never miss an update. This is for educational purposes only and not financial advice. Trade safe, protect your capital, and we will see you in the next one.